Welcome, everyone, to today's discussion about Project Hamilton with Jim Cunha. Jim is Executive Vice President of Secure Payments and FinTech at the Boston Fed and is co-leading this project with MIT's Digital Currency Initiative. Project Hamilton, launched in August 2020, has been exploring the technology design aspects of a hypothetical central bank digital dollar. And we are delighted to have Jim here to discuss the findings of Phase 1, released in the February 3 report, a high-performance payment processing system designed for central bank digital currencies. I'm Patricia Haas-Cleveland, U.S. President of UNFIF. Welcome, Jim. We're delighted to have you back with us, and congratulations on what seems a very successful Phase 1 of Project Hamilton. Before beginning, just a quick reminder to everyone that today's session is on the record, and after initial remarks, we will open the floor to questions. So please enter them in the chat box. Also, a brief backdrop to set the stage. Today's discussion is especially important as it gives us a chance to look under the hood at the engine or the kind of payment processing system that could power a US CBDC. But it also takes place amid an ongoing flurry of US policy and regulatory activity related to digital assets. Last month, on January 20th, the Federal Reserve Board issued its long-awaited discussion paper exploring the pros and cons of issuing a digital dollar without taking a position on the ultimate desirability of, in fact, issuing a US CBDC. That question is not our focus today, but by inviting comments through May 20th, the board has formally, and some would say finally, launched the public debate about a US CBDC. Shortly thereafter, it was reported that the White House would be issuing an executive order tasking a wide range of US government agencies to assess challenges posed by cryptocurrencies and to develop a workable regulatory framework for digital assets by the second half of the year. And lastly, today's session comes in the midst of a debate between the US administration and executive branch and the US Congress about the urgent need to establish a regulatory framework for stablecoins, given their exponential growth to 175 billion from just 5 billion 2 years ago, all of which could beg the question, if you have well-regulated stablecoins, do you need a CBDC? This brings us back to the technological feasibility of a CBDC to start with. One final point. It is noteworthy that Project Hamilton, in researching options, has been technology agnostic in looking at different approaches that could take into account various factors, such as speed, throughput, scalability, and resiliency, that could support the scale of retail transactions in a large country such as the US. The fact that the software and code bases are open source should indeed enhance the likelihood of solving outstanding challenges. So Jim, over to you to tell us about the findings of Phase 1. And I have to say, to the layperson, it seems that given your experiments, most design challenges can indeed be solved from a technology perspective once the policy decisions are made. But you tell us. So welcome.
Great, thanks, Patricia. Pleasure being back here. Let me start by thanking you and the organization for having me, but also I'll give the normal Fed disclosure. These are my words, not necessarily those of the Federal Reserve System. You did a great job of teeing up sort of the environment we're in and really the need for this technology research. If you think about the timing of the board's paper, the consultation, the obvious discussions, debate that we'll have after it, if in fact we do desire to go forward with the CBDC, if we don't start our technology research now, we'll be years behind. So the whole focus of this is really to be ready should we choose to act. So if you go to the next slide. Patricia mentioned the Project Hamilton paper. We just launched on February 3rd, the results of our first phase of research with MIT and an open source license for the code. It's a very technical paper. I'll be very clear about that. So I want to stay at very high up in the technical stratosphere here. I'm not going to dive too deep, but what is Project Hamilton? It's a multi-year technology research effort between us and MIT, at least this first phase A of our work. And we're trying to create a research model to support what would be a digital dollar. We actually have multiple designs because it's research. We didn't want to just focus on one platform, but multiple ways of thinking about this. And as Patricia said, we're technology agnostic. Some countries are presuming that distributed ledger or blockchain is the answer. Some are starting with the assumption that it's not the answer. we're agnostic. So we're going to look at everything and let the research results dictate where we go next. It's really important also to note that we have not made any decision to go past this research, be it to pilot or production. So we can go to the next slide. So we have two tracks of work, two phases of work with Project Hamilton. The first is build the core engine. This would be the engine that can mint the money, store the money, and move the money, the actual fundamentals of the money system. We have very high goals. Anybody can build a system that moves data around that's called money, but can you do it at scale? So our goal was to do it at scale. We set a target of 100,000 transactions per second, finality in under 5 seconds, robust resiliency. You can't have money that goes down. If you're following world events, the Eastern Caribbean Bank and the Bahamas are both in production, and the Eastern Caribbean system has been down for a couple of weeks. You can't have that in a production system in the scale of the US. So strong resiliency and strong privacy. And that's the phase we're done with, which we'll talk about next. But in phase 2, we'll be thinking about what are some other major policy choices that we can think about, code, and test. Now, those decisions have not been made, but we know the questions: privacy, compliance. Some of these policy questions also are at odds with each other. So how do you think about, for instance, maximizing privacy, but still catching the bad guys? Some of the ways you can do that may be based in new technologies, new ways of thinking about applying technology to a CBDC. Interoperability, cross-border. These are some of the significant areas represented in this particular topic that we'll be thinking about as we start our next phase of work in phase 2. If you can go to the next slide, we'll talk about, so what did we do? First, this is not a complete system, and it's not a production grade system. It's a research system, so that it's not fully built out, doesn't have all the forms and features a payment system would need at this point. So we started with the core engine. We also had some principles or assumptions in mind. We don't have requirements, so we had to have some things that are driving us. I mentioned technology agnostic. We also wanted to build it ourselves. Obviously, there are platforms out there, which we'll talk about a bit, but we wanted to build it ourselves in C++, because when you build it, you learn a lot of things. We'll talk about one key learning we've had along the way. Flexible, because we don't know the policy outcomes, and also policies will change. You can imagine if GDPR happened and the people that were building the systems 10 years ago knew it was coming, they would build their systems differently. Minimize the data being processed. One, because it allows you to go really fast. It also eliminates issues with PII and other issues relative to holding a lot of data around the people that are transacting the money. Parallelizable. We want to make sure that we can have parallel processing, one for resiliency, but also for speed. So that was a design consideration. And also, we would control the system. That's our assumption. So we wouldn't have to have really heavy consensus methods like you do with Bitcoin, proof of work, which are really slow a system down and really create energy waste. So we are known, trusted components of a system. We don't have bad actors potentially in our network in the same way that you could potentially as a Bitcoin miner. So controlling the system allows us to eliminate some of the heaviness of those consensus methods. So if you go to the next slide, we'll get into specific results. Back one, please. So we built two core engines, and here's where we had a major learning early on in our system. The first, which we call the atomizer, maintains a global order of transactions. So transactions are processed in the order they come in. The second platform, two-phase commit, does not. We actually started with an assumption that we had to maintain the order of the transactions. And then we actually couldn't think about a reason why that's a requirement. So we eliminated that requirement, and we're able to basically take the same system, strip out some of the technology, and create one where the order didn't matter. And so what we were able to achieve for results was the atomizers were able to achieve 170,000 transactions per second, 99% of which had finality in under 2 seconds. And the two-phase commit, we had 1.7 million transactions per second with 99% finality in under 1 second. So the difference here is that the first platform, the atomizer, has a bottleneck. you have to funnel through a particular code base to be able to maintain the order. And that has profound impact on scalability. We're going to continue to push the limits on two-phase commit. We think we can get well above 1.7 million transactions per second. The goal is not that we think we'll have 1.7 million transactions per second running through our system, but it's research. With research, you want to push it till you break it. When you break it, you learn something. So it's really important to go as far and as fast as you can. Both are highly resilient. There's multiple tiers, there's parallelism, and they're distributed multiply physically across the clouds. We had 3 cloud data centers in the US, any 2 of which could go down would still be resilient and stay up. Now, the next 3 pieces, the major design of this does not look like a traditional payment system, like the FedNow system the Fed is building or the faster payment scheme in the UK. The design of the system actually looks more like Bitcoin. It doesn't totally take advantage of blockchain. It is not Bitcoin, but it does borrow from cryptocurrencies in that we rely on public and private key pairs to identify who a user is. In the database itself, we know them as a public key, but that doesn't get linked back to the individual itself. And the security is built around the private key, just like Bitcoin works today. We don't have accounts. Usually a bank account would have your name with the balance. We have something called unspent tokens, or UTXOs. So there are literally pieces of money in our ledger that are assigned to individuals. So Jim, I may have a piece of money for $19, one unspent token. I may have another unspent token for $25. So it's not an account, it's just pieces of money tied to individuals. And the way you move money is you take the input, which is say that $25 token, you destroy it, and you create the $10 token I'm giving to Patricia and the $15 token that comes back to me. Those are called outputs. So that's the structure of how the system works. And we did build it very flexibly so that for future policy choices, design choices, in the evolution of a payment system, we can evolve it. That's where the tiering comes in. With a tiered architecture, it's easy to take components out and put them in. Also, we get a lot of questions about cyber resiliency relative to quantum attacks. And our cryptography can be pulled out and replaced with something else so that it's not integrated tightly with the software. So it allows us to be flexible even in the cryptography we use. So in result, that's it. If you want to read the paper, you can go online to the MIT website. As I said, it's a 40-something page technical paper. It goes deep into the testing and how we got the results. I also should say that we built a really robust testing environment and platform for driving this 1.7 million transactions per second. And we're hoping to actually take that code that we call a test controller and also to issue an open source license for that so people can use that as they contribute to the code. If you go to the next and final slide, I think we've got one of the best teams in the world between us at the Federal Reserve Bank of Boston and MIT. They got some people that have been working on cryptocurrencies for the last 5-6 years in CBDCs. But that doesn't mean we're going to necessarily build the right system or the best system. So track B work, which is just the Fed, this is not with MIT, is we're also doing a review of what's available in the industry, both for open source platforms, blockchain platforms. Can they be the base of our system as opposed to what we built now? But also private sector actors. There are companies out there, one on our panel today, that's built a platform. So we're looking at them now. We've had meetings with them. We're looking at them and trying to understand what they do. And then we'll do a deeper dive in what we think are some of the leading platforms in the private sector, even bring some in for testing in our labs. The purpose here is we're not trying to make a buy versus build decision. This is about learning. So it's really about understanding where's the private sector, do their systems pass muster? If a platform says we can do 500 transactions per second, we don't think that's going to meet our needs. That's not what we focus heavily about. But we think in both the private sector access, the university that we're working with, and then the open source code, we think we'll have the best understanding of what's possible technically for CBDC in the US context. So let me stop there and pass it back to you, Patricia.
Thank you, Jim. That's a great overview. There's a lot to digest, but the thrust of what you're saying, I think, is very encouraging. Both that you've made it as far as you have in tackling a lot of the issues that you described, but also the way you're approaching it, that you have a very, not just open source, but you're really engaged with the private sector to see what they're coming up with and how that could be relevant. And to your point, it's not buy or build, but it's really looking at what could be the best platform. And so to achieve that, you're exploring a lot of different things. But again, I think including the private sector in the process is great news, because there, as we all know, a lot of innovation going on there. Before turning to some of the technical aspects, I'd love to just take a big step back. We're not going to discuss the policy issues, but I know that one of the main drivers or arguments in support of a CBDC has been financial inclusion. And so I think there's a lot of curiosity about how would a CBDC actually improve financial inclusion. We know that in the US alone, there's more than 7 million people, more than 5% of US households that remain unbanked. And also that about 36% of those without bank accounts do not have smartphones. So how are you thinking about addressing accessibility in terms of the project?
Yeah, and actually, before you passed it to me earlier, you made a statement/question about whether we've solved the problems, and the answer is no. And this is one of the areas where we haven't solved all the problems. First of all, once again, this is my personal opinion, but I truly believe a CBDC with private sector innovation on top of it could help with financial inclusion. I believe, once again, I'm not the policymaker or decision maker. I believe that it should be a stated public policy goal that financial inclusion is part of our mission, what we're trying to do with the CBDC. So that's sort of the beginning point. When you do that, you build it differently. So a few things, I like to use an example where take a single mother of two who gets a check, working at a hotel cleaning, goes to a check casher, cashes the check for a fee, gets a money order for a fee, sends remittances overseas for a fee. Here's someone who can't afford to pay those fees, but has to. All that can be done with a CBDC and innovation in the private sector without necessarily having to have a bank account or necessarily using existing financial services products. I think that's where some of the innovation can come in. You mentioned, you said that I think the number is 1/4 don't have smartphones or 1/3 don't have smartphones, but I like to look at it as 2/3 do. So 2/3 of them do have smartphones, which is a big number. But for those that don't, what we're thinking about, not actively working, but in our future plans and some others around the world, central banks around the world are thinking about what are the form factors? Can it be just a non-smart standard phone, a flip phone even, with just certain basic capabilities? Is that something that can be used? Could a chip-based card, contactless card be used at point of sale and through other means? So we're trying to think about all the devices that are available and which ones can help both with financial inclusion, but also with other functions, such as in the U.S., we have the American with Disabilities Act, meaning money would have to likely be usable by someone who's blind or deaf or physical impairment, et cetera. So how do you think about that in the form factor that's used? And also, how about in a national disaster? If you're in a place where there's suddenly no power, no cell coverage, how do people transact? So those are some of the things we really think you have to have both to support financial inclusion, accessibility in general, but also even in certain circumstances where natural disasters or, just where you are in the country may not have the best coverage. So I think those all come into play in the same realm.
Absolutely. And you touched on resiliency, which I think is also a very important aspect when you talk about being offline or off grid, either through a natural disaster or because where you are in the country. So that's obviously a complicated and challenging part of the exercise. Let's talk about payments in general for a second. Obviously, the whole ecosystem and world of payments is changing very rapidly with innovation and new products that are available both from financial services firms, but also from other innovators. let's go back for a second on stablecoins, which has been a huge focus just in the last few weeks. We saw Undersecretary Nellie Liang testify for almost 4 hours in front of Congress about the importance of this rapidly growing subsector. Do you see, how would you see a digital dollar existing alongside stablecoins and other digital assets? Would you see them competing, displacing, complementing? How do you think about that?
Yeah, so at some level, any payment system is going to compete with another. Debit cards compete with credit cards, which compete with cash and checks. So there is a natural competition, but that's healthy. You want to have healthy competition amongst your choices. You also want both sides of the payment equation. You want the merchants or the companies having choice, and you want the consumer to have choice. So I just see this as more choice for how someone wants to pay or someone wants to be paid. So I see there being a coexistence. I don't see a CBDC launching, wiping out cash or crypto or stable coins. I see there being a natural competition, and I think that's healthy. So I think they'll coexist.
Yeah, that's great to hear. And I mean, in the true sense of innovation, the more competition you have, often the better product or options that you also find for the consumer. And another last question. So we talked a little bit about the private sector. Let's talk about financial intermediaries and the role they will play. I know the Fed board paper said it did assume there would be a role that the system they envision should be perhaps intermediated. It gets very complicated if they then become a retail bank for consumers. But let's talk about the role of intermediaries. How do you see them playing a role? And do you think the role of commercial banks might be threatened by the various ways that a CBDC could work, given their importance in overall financial stability in the financial system?
Yes, the board paper does state they believe it will be intermediated, and they think, and I believe that banks will be one of the major conduits, like cash is today, from the Federal Reserve to a bank to an individual or a company. So I think that is a likely outcome. That's part of the consultation paper questions about what does that look like? Is it only banks? Are there non-banks? So for instance, for financial inclusion, you could envision non-banks may be able to innovate in a way that reaches those that currently don't have bank accounts or use alternative services. So I think that's a key question there relative to who are the intermediaries. And then what those intermediaries do is still open. So for instance, does the Fed build a wallet that is then used by the intermediaries with their customers? Does the Fed build a standard that those intermediaries build their wallets to or their websites to? So even how the intermediary reacts to the customer. What happens if the customer has a question about their CBDC? Do they go to the bank, and how does the bank talk to the Fed? So it's a very complex ecosystem when you talk about payments, much more than most people think. You know, relative to the roles of banks, it's a serious question, and one that needs more study as to what could be the impact on bank deposits. If deposits move to CBDC, that obviously lowers the capital of the bank and has less for them to lend. I mean, right now banks are relatively flush, but still it's a really important question as to what could the implications be. My personal view is if a bank provides a really robust interface between the bank and the CBDC, so I can easily move money from my DDA account into CBDC, I'll have less money in my CBDC because it's easy to move it if I need it. If it's hard, like if I go to the ATM, I take out $500 because I don't want to go back all the time. And so if a bank is able to make it easy to move money back and forth, it may seem like an oxymoron, but I think that actually helps banks to make it easy to make that switch. But it's an important question. There are discussions about can the design of the CBDC help reduce the risk of those deposit fleas. For instance, some are thinking about capping the CBDC rate. Some countries are talking about interest rates on CBDC, which would have a negative impact, obviously, on the attractiveness vis-a-vis a bank account. So I think there's a number of things here that are important. The one challenge there, though, is if you make the CBDC less attractive vis-a-vis bank deposits, you also are diminishing the value of the CBDC. and potentially limiting its adoption by the public. So it's not a simple question, it's an important one, but I think a lot more study is needed, and think about the design implications and how they interact, and where does the innovation happen? Banks should be thinking about how would they innovate if there was a CBDC and they were a conduit, in my opinion.
So a lot of balancing of potentially conflicting objectives where you want to achieve both of them. Before we open it up, let me just turn back real quickly to something else that the Fed board implied about what the design of a CBDC should address. So we mentioned that sort of a CBDC that would serve the best interest would be intermediated, it would be privacy protected, it would be widely transferable, and it would be identity verified. Are those, and again, I don't mean to put you on the spot, but are those issues that can be solved with regard to design, or do you think, again, there might be some tensions within some of those that will be, very problematic?
Yeah, there are definitely some tensions. I mentioned before that even policy choices are at tension with each other. So how do you have privacy protected and identified to the individual for compliance purposes? And that's why I think new technologies in cryptography and some of the leading edge, like, I won't get too deep into it, but zero knowledge proofs, which is a way of examining data without seeing it. Some of those new technologies may actually allow you to maximize privacy and still catch the bad guys. So there's definitely inherent trade-offs there. And what does it mean to identify an identity? That's different in a country with a digital identity, versus the US, where we don't have that. So the challenges are sometimes, I should have said this earlier, the challenges are sometimes different country by country based on your local laws, norms, and even whether you have a national identity or not. So I'm talking about the US context, but for every country that's listening today, your rules may be different and your results may be different.
And we haven't even talked about the international implications of using a CBDC for dollar CBDC outside the US, and sort of the importance of standards and harmonization and interoperability. So a lot still out there to look at. Let me open it up now for questions. I'd like to first invite some responders to ask you some things. Andrew Turner from FIS Global had a question. Are you with us, Andrew?
Yes, I am. Thanks, Jim, for a very insightful session and a great report. So the primary focus in the first phase obviously was transaction processing and performance, and your test states users would be their own custodians and take self-custody of keys. Are there any concerns regarding the end user, any potential risks? For example, if the user loses their device, would their CBDC/keys be recoverable? And a second quick follow-up question regarding Patricia's questions on the intermediaries. The testing obviously assumed no intermediaries, but do you think banks and PSPs could also, play their role they do today with consumer protection in terms of checks and safeguards? And perhaps they could possibly do key recovery as well, should a user lose their devices?
Yeah, really important questions. And so I should say that the way we built the system was to be flexible. So one model would be a user could hold their own keys, self-custody. From there, it's easy to go to an intermediary model, where either the intermediary holds the keys or at least assists with the generation and support of those keys. So we're not trying to state that the end user would hold their own keys, but could, because we're trying to be flexible. And yeah, if you think about the Bitcoin world, if you lose your private key, you lose your money, and there is no recovery. And so we have not really gone too deeply into what are the rules. So for instance, I've had debates with people about, if you lose your money, should you get it back? If you lose your $100 bill, you don't get a new one. So should you do it with a CBDC? Obviously, we can build it that way. If your money is stolen, should you get it retrieved? So those are design questions and policy questions still to come up, but there are real risks and real consumer issues relative to having your key, losing your key, and one of my jobs, my other day jobs is reducing fraud in the US payment system. So we think a lot about the end user's role in protecting themselves against fraud. So I think that's huge. And I definitely think intermediaries will be part of the equation. I mean, that was I think a push within the board's paper. And I think PSPs, banks are obviously logical candidates. And I think, they could be either the custody of the key, which works in our system, or they could generate the key for the customer, and the customer, if they lose it, they lose it. So I think anything's possible here, but I think you're hitting on some of the challenging, both policy questions and technical questions, but in the end, they're also adoption questions. How attractive is this for a business or a consumer to use? And some of these play there as well. But great questions.
Thank you.
Thank you for that, Andrew. Let's turn now to Simon Chantry. Simon,
hi, thank you.
There?
Yes, can you hear me all right?
Yep.
Yes.
Okay, great. Yeah, thanks, Jim, for the presentation. It's really great to see the Fed moving forward with this substantial effort. We're also really looking forward to integrating our digital currency management system with Open Cbdc. So we're certainly grateful for the contribution and the fact that it's in open source format. I have a question regarding privacy protection. You touched on a number of mechanisms that could be used. We're looking at zero knowledge proofs at the transaction network level. We also think about the controls that could be in place at the administrator level, the specific department of the central bank who would be acting as an operator or administrator of the transaction network. And then also we think about it from the onboarding perspective of enterprise and retail clients, any clients for that matter, who would be using the CBDC network. And inevitably we end up at the identity problem and the fact that potentially a self-sovereign digital identity would solve a lot of key challenges for privacy protection. It does introduce a whole sort of downstream considerations surrounding how do we onboard people to SSID, to self-sovereign digital identity. And I was just very curious to hear if the Fed has considered an SSID in the context of privacy protection. And if not, what other elements have you considered for privacy protection at that administrator level for the central bank as they sort of grow into this new challenge of operating a CBDC network?
Yeah, another great question. And obviously identity is bigger than financial services, which makes it part of the challenge. Yeah, we're not actively promoting or pushing any national identity direction or solution. I think it's fairly obvious that if there was a national identity, it does make the digital identity related to a CBDC easier because it's there. But we're not pushing anything particularly. Today, the way it works is you've got components within the consumer side, the phone itself with a card. You've got the network that has security and privacy related identity components. You've got the Federal Reserve. We do run payment systems. We have a fair amount of information on checks, in ACH items, and et cetera, that goes through our wires. We protect that. We don't see it or do anything with it. That's not our job or our mission to exploit that data. But currently it's spread across the ecosystem. And so going forward, I think it really plays out the same way since we don't have a national ID in the US, is that it has to be most likely in the hands of the backbone of the network, us, the standards for wallets, the intermediaries, and how generally today the intermediaries are the one that has the information about the consumer and have the KYC and all the other components and the protection of PII. So right now that's mostly the intermediary. But I think going forward it would be spread further with a CBDC, and I think we try to get to more national standards relative to the protection of the identity and the protection of the data relative to a CBDC. But that's just how I think things will evolve. But definitely national identity is a key component in some jurisdictions that make this easier.
Thank you.
We even heard from members of Congress who are very focused on this, the importance of a digital identity and how that's linked and is almost a necessary precursor to a CBDC. So clearly it is a very important topic.
I wouldn't call it a necessary precursor. It would make it easier because you have something to connect to. I totally believe that, but we have payment systems today. Most payments are digital today without a national ID. So I think it does make it easier, but it's a very complicated topic.
Yeah.
make sure it's.
That wasn't my opinion. That was the opinion of the congressperson. But that's just to say how important it is to people, but it is
Absolutely
very complex. Let me invite now Pietro Grazano from Algaran. Are you there, Pietro?
Yes, I am. Just let me turn on my camera. Not sure you can see me. I have some connectivity issues, but probably you hear me well, right?
We can hear you well, but not see you.
Yes.
Fantastic. So sorry for having a faulty camera. Thank you, Jim, for the presentation. Thank you for all the work. I was just asking myself if in the various works of President Hamilton, you've been considering also the logics of interoperability with the tokenization platforms. So payments, fine, but then there is the immediate possibility of extending and expanding the logics to tokenization, to programmability, and so on, which have been the type of boundaries of the exercise here.
I am going to ask you to repeat that only because I have a home video issue with my cat screaming in the background. So, Pietro, if I could ask you to repeat that one more time.
No problem. No, I was just asking myself if during the project you've been considering logics of programmability and interoperability with the tokenization platform. So going somehow beyond payments.
Yeah, absolutely. So from the interoperability, we're thinking about, for instance, cross-chain atomic swaps. Mostly in the wholesale space, that's being reviewed by Project Ubin and Jasper and some of the others. But how would you have an atomic swap between the CBDC and, say, an asset on another chain, a token on some other chain? So we're definitely thinking about how that works. And programmability, we're really trying to sort out what different use cases programmability comes into play and how we think about that. And we're actively doing this now. How we think about that relative to the entire stack. So, for instance, my personal belief is the core processing engine should have as little programmability in it as possible to make it simple, like Bitcoin itself. But then there are other layers that we can have programmability and more logic applied, whether it be for compliance, whether it's for administration of the network itself. Some people believe money should be smart. And money should stop you from doing things you shouldn't be doing. I'm not in that camp, but I do think we are looking at the programmability, how robust, how different levels, both from functionality and different use cases, but also for performance. If we have a very robust programmable, say smart contract-like feature, then what does it do to performance of the system itself? So it's both a performance issue, a usability issue, and a forms feature issue, and that does play right into the cross-border and interoperability. So yes, that is part of our next phase of work, and we're actively looking at the programmability component.
Fantastic. Thank you very much.
Welcome.
And programmability will probably play a very important role once you get more direction from a policy angle, following some of the feedback in the open debate. Let me turn now, if I could, to Wolfgang Zeidemann, who is CEO of G&D Currency Technology. Welcome, Wolfgang.
Thank you, Patricia, and thank you, Jim, for sharing your thoughts. A very clear speech. I'd like to turn to another aspect again, more looking at the ecosystem and the consumers, the user. What we've learned from the recent study that we did together with OMFIF on consumer attitudes towards CBDC is that the US is quite advanced in knowledge of digital assets and cryptocurrencies. However, when it comes to the digital dollar, the US seems to be less enthusiastic about the concept of a CBDC compared to the rest of the world. What is your perspective on that? How can we position the digital dollar into the existing landscape and create positive awareness around it? And how can we narrow that gap between understanding of the benefits and of a CBDC and the appreciation that some Americans associate with it?
Yeah, another good question. This will be a good afternoon, a good morning of questions. So, one of the challenges and benefits of the US is we have a very robust ecosystem for payments. And so people, I think, honestly will question, do we need one more? You know, we don't tend to retire payment systems. We still have paper checks, as silly as that seems. So I think part of it is that we have a good base of payments already, and people are trying to understand what problem does this solve? What's the use case where this benefits? And what is this going to do to the existing system? So obviously you have incumbents, and incumbents worry about what a new entrant will do to their business, which makes perfect sense. So I think that's part of the equation. We have not been as far along with other countries in the robust debate. We have our consultation paper that's out. We tend to be, I'd say, slower and thoughtful, not more thoughtful, but thoughtful about these things. As Chair Powell has said, you know, we are the reserve currency, 60% of all transactions around the world. So we have to get it right, not be first. So I think a lot of that risk approach and, thoughtful approach is what has caused us to be slower in some cases. But, and the debate has been in very small quarters. The debate has not been in public, really, in the US. We have not done that type of a consultation. In this consultation, hopefully we'll get some of the both individuals and consumer protection groups and others that think about the consumer needs into the equation. So we're hoping that this is the beginning of that dialogue, but we definitely have been further behind. And like I said, I think the robustness of our platforms, does give some people pause about what's needed, and then, the risks that come with it.
So do you consider that to make it a legal tender and at the same time offer a vast variety of potential use cases, from person-to-person payment up to programmability use cases, to make it very attractive, that these two aspects add to the attractiveness of the payment instrument?
Yeah, I think the legal tender question, which I believe has to be, an act of Congress, if I understand the law right. For one thing, now you have to accept it. I mean, legal tender is misunderstood by many people, at least in the US. It literally means it has to be accepted for debt, public and private. So if you pay your taxes, the government has to take a CBDC if it's a legal tender. If I owe you $10, you have to take a CBDC because it's legal tender. It's a private debt. It's not necessarily had to be taken over the counter. That's not a debt payment. But I think that builds in a set of use cases that automatically give you volume. The other thing is, I don't think, because we have not been directional here in the States, businesses and banks are just trying to understand what it might mean. So a business, I don't think a business, large or small, yet has, thought about and deeply integrated into plans what a CBDC means to them. If they took it over the counter, what does that mean? I think one particular use case is at a point of sale. If you took a CBDC, you may not have taken a debit payment or a credit payment. So that works into the equation of the cost effectiveness for a business. I just think we haven't had that robust discussion that drives those use cases. But I do think everything outside of B2B is open for use. And if it's well designed, if it's fast and very cheap, if it's a public good, cheap or free, it can be used for things that we don't have the current ability to do today, like micropayments. You can't do micropayments cost effectively in a RTGS type of model versus just bulking them up over the course of an hour, or Internet of Things. Can my refrigerator order my beer and pay for it within the same transaction? Possibly. So that's what I think some of the future is. I just don't think we've been far enough along in our strategic thinking and planning to get there as a country.
Thank you, Wolfram and Jim. I'd like to now open the discussion to questions from the audience at large. So please send them in. We have a few already. Alan King of IBM wants to know why you're using UTXO rather than account-based. I think you touched on this earlier, Jim, but maybe you could go into this in a bit more detail.
Yeah, for one thing, we approached this project, we could have just treated it like a regular payment system, but we thought we had an opportunity to think differently about it and think about the nexus between cash and payments in a way that allows us to be more forward thinking and think differently about it. And so, there are some lessons in the cryptocurrency world that we thought the UTX model worked. And my understanding is I've got people much smarter than me on my technical group, but you can actually process a UTXO transaction the way we've designed it, faster than you can do an account update. And so part of it is speed, part of it is flexibility, but this model does not preclude us from shifting to an account-based model. I mean, that's something that we could update our system to do if for some reason that from either the policy perspective, legal perspective, or acceptance perspective, that made more sense. But we thought we'd start here to start with something that was different. And we had a lot of people that were really deeply and focused into the crypto world.
And maybe, Jim, just remind folks about the UTXO, that it is the unspent balances. In other words, how you're looking at it versus an account. I mean, it's the unspent tokens or money versus the account balances. Yeah,
so my account at my bank, they've got my account number, and next to it in the record is my balance. And they've got to both save the transaction, but also update that balance every time there's a change. With UTXO, there may be 10 pieces of data in the ledger that says I've got $10, one UTXO, I've got $25, another UTXO, I've got $175, another UTXO. And when I want to spend it, one of those UTXOs gets, once again, I've got a $25 one, that gets wiped out. I give you 10, and I give myself back 5. So the input is 25 and the output is 10 and 5 as two separate transactions.
Great, thank you. And another question has come in anonymously. What kind of use cases are not supported by the 2PC engine? Is it because of its lack of global transaction ordering, or what is it? Clearly, that was the fastest one that you looked at, but maybe you could elaborate a little bit more on that.
Yeah, let me raise up a little bit relative to Cbdc itself. Like I said, we wanted to have minimum data, very fast. So we don't see the Cbdc as being the best candidate, for instance, for B2B payments, business to business payments. If you look at, say, FedNow, the faster payment in the US, they're going to carry ISO 222 messages so that the remittance information needed for a B2B payment is covered. We don't see that natively being part of our Cbdc, at least at this point. So that's probably the use case least attractive for Cbdc. Relative to the design of the system, the global ordering, we're still researching this both in law, in regulations, and in just norms. We couldn't find a use case where the order mattered. You can't spend money you don't have. And so you can't be spending money assuming it's coming in. So the order doesn't matter from that perspective. If you go to spend $25 UTXO, we lock it. And so there is an order in that the next one that comes in can't use that same. So it's both to stop double spending and to make sure you're not trying to, through an error, spend the same money twice. So there's no order there, but the order is maintained because the first one in gets to spend the money. But we couldn't think of a case where the order mattered. We're talking about at 1.7 trillion or million transactions per second. We're talking, microseconds in seconds of any difference between a transaction coming in and when it's processed. It's not going to be one's processed here and the next one's processed an hour from now. That's not the time of difference we're talking. It's really in, hairs of seconds.
Thank you. Question from GFT. Will it be possible for existing or future messaging systems such as SWIFT to integrate with the technology you are currently developing?
Yeah, we haven't thought about integration with existing systems yet from a couple of perspectives. One is the messaging systems. How would you carry an instruction for a Cbdc? I'm sure there's ways of making it work, but the question is it the most efficient and effective way, and are you creating other vulnerabilities? But we have not yet really talked about, can this, first of all, cross-border, how do CbdCs interconnect? That's a goal of many. How does a CbdC interface with a faster payment system? Payment systems today don't interconnect. Money doesn't move from one rail to another. An intermediary does that. So we haven't thought a lot about it, but I think as we get deeper into this and think about the use cases, I think that's an area where we definitely would need to focus. The operators of those networks may be able to hold CbdC so they could move it on behalf of their customers. But it's not necessarily moving a CbdC over a SWIFT or an equivalent per se. But theoretically, it can be done as an instruction to move the money.
another anonymous question. For Project Hamilton Track B, is the Boston Fed working with other regional Fed banks? And it's interesting to note that a number of regional banks are now setting up sort of CBDC institutes. So it would be interesting to sort of comment on that broadly.
Yeah, so, this is the Boston Fed, but this work is on behalf of the entire Federal Reserve System. This is not a Boston-only project. This reports up through, the Board of Governors and the senior leadership within the Federal Reserve as a project on behalf of the system. Right now, we're Boston-based. We work very closely with the Board of Governors. They've got a technology project themselves called the Tech Lab, which we interface with. We do talk with the policymakers, obviously, but this is the main project. There are other, I'd say, more desk research projects around the Fed and people thinking about it, but actively building and testing a CBDC, it's mainly Boston. But, as the project grows or we need certain disciplines, we do pull them from other parts of the Federal Reserve. And I should also say that we also work with other central banks, both through the BIS umbrella, papers that we've published, but also to think about, are there ways that we can actually do technology experiments together? So some of those conversations are happening now. Then any central bank can contribute to our open source CBDC if they would. So we do a lot of partnerships.
Excellent. Here's another anonymous question. What are the principal knots and policy switches that you can tweak? Any observations? And I wish I could provide more color on that, but that is the actual question. So
the policy options, I guess I wasn't quite catching the tweak part of it.
Policy switches. I don't know, maybe, go ahead.
I'll say the policy options obviously affect the design of the system. We mentioned a number of them. There's a great BIS and IMF and other papers, World Bank papers on, what are the policy implications for CBDC, privacy, compliance. Do you have an interest rate or not? Those are all policy questions that would affect how we build a system. But the flip is also true. I do believe that with new technologies, I mentioned before, we may be able to enhance policy choices and remove some of those trade-offs. And I'll give the same example because it's a great one, which is, can we maximize privacy and keeping data from available, keeping data from whom? What do you mean by privacy? And still catch the bad guys. So that's one where a new technology may be able to tweak the policy to some extent.
Yeah. No, maybe it's more like also, will the platform or the technology, the design that you develop be flexible enough to accommodate policy changes as they come down the road? That could be, in other words, once it's built, is that it? Or is the idea to have an architecture that can be flexible to adjust?
Yeah, the idea is to be as flexible, especially in this early stages, because what we have now is store, move the money. That's very flexible. We have any intermediary model, any privacy options, anything else. The rest of it comes either as you adjust the core engine or as you layer different layers of technology on top of it. Or if you think about the role of the intermediary. So I think, yes, the goal is to make it as flexible as possible. Not always easy to do as you get to a complete system. But when you have a tiered system with multiple levels of the architecture and components that do different jobs, and if you read the paper, you see that we have multiple components that do different jobs, validate the money, check the money was actually spent, not spent, interface with the end user. Each of those are components that allow flexibility. So that is the goal.
Great. We have a question from one of our colleagues at OMFIF. Do you expect the U.S. to remain in a leadership position setting cross-border standards when the launch of its CBDC is likely to lag many other countries?
Other than China and some Caribbean nations, I'm not sure who will lag, because everybody's in this, most every central bank, every country out there has said, even some of the more advanced ones, you take the Riksbank, or you take the UK, they're all saying they're not sure if they're going to launch or not. So when a launch might occur, I think is still in flux for many of them. The US wouldn't set the standard, in my opinion. If you look for the Bank for International Settlement, they've got I think it's called the Road, I forget the name of the title, but they have a paper on cross-border, which is a roadmap to fixing cross-border. There are 19 different work streams, one of which is CBDC. So cross-border is not just a technology issue. there's regulations, there's laws, there's FX change, there's, geopolitical, all sorts of things that come into a cross-border ecosystem today, both wholesale and retail. So I think it's going to happen on the international stage. I think the BIS is a key place for that to happen, with standards coming out of, I would hope, standards bodies, around the world. I think the US would be at the table and a heavy influencer, like many other countries. It's an important topic, and with the reserve currency status, I think it's important to be at the table. But I think because we're not first with a CBDC doesn't diminish that. And I think this is a long.
Great. Another anonymous question. Do you envisage a way to enable follow the money when authorized or based on consent?
Yeah, obviously a policy question. The way we think about it in the States, for instance, I mentioned before, we run payment systems. We have data about wire transfers, ACH, checks, all sorts of things. And unless there's a court order, we don't allow that data to be exposed to anybody. We're not examining it and trying to draw conclusions relative to, any particular topic. We don't allow others in unless there's a court-ordered, legal process to get access to that money. So I think that would exist in my mind if we had ledgers and there was data there that was important for sanctions or, legal cases, et cetera. I would think that same principle would hold. But right now we have no specific. I guess I'm curious as to the, if it was permissioned. So I'm not sure if you're going to permission them, the tracing the money, who are you permissioning to see it? Someone else or who? So I'm not sure what the permissioning of that visibility would look like. But I would expect we would follow the current way we handle payment systems today, which is, court orders and legal actions can get access to data, under strict conditions. But it would not be an open ledger for everybody to see. That's a given.
Here's another anonymous question. You've touched on this a little bit, but I'm sure this is a question that many might have. Do you think that you will continue to build the systems yourself, even when the CBDC goes live, or at some point might you outsource it to a technology firm?
I don't know. I think, we're building it to learn, but we're also looking to the private sector. I would see a likely outcome being it's not one or the other. It's a combination of what we would build and what we would get from others. A payment system and a storage system is complex. So for instance, if you look at FedNow, the real-time payment system Boston Fed is building, some of it we're building, some components like fraud and some like maybe directories and other components of the system we may get from private sector actors. So those decisions are, being analyzed now, but I wouldn't see this as fully built or fully bought. I would see it as a combination, most likely.
Mm-hmm. Another question relating to financial inclusion, and that is, how can a CBDC help financial inclusion unless the Fed is going to allow wallets with KWC Lite? Will this happen?
Well, I think one of the key components is if it's fast and cheap, as I mentioned, and there's innovation in the private sector, I think people will find ways to innovate and either in a nonprofit setting, solve some problems, or in a for-profit setting, make some money by solving a problem that exists today. One potential that some countries are looking at is anything under $500 could be anonymous. I don't think we're going to go the anonymous route, but may have different controls over identity and things like that. But I think it really comes down to one, making a public policy goal, two, make it cheap and fast, and three, innovation in the private sector. I think there'll be things we haven't even thought about, with that combination of things.
Great. Just one or two quick final questions. Question from GVE. He said he answered all 22 questions in the CBDC paper that was published and wanted to know if you actually read comments by CBDC experts like himself.
So first, everything is public. And so our team will be, first of all, the public concept process is the Board of Governors. They read everything and they think deeply about every comment. As a designer, I'll be doing the same. I'll be reviewing those to understand what kind of design considerations come out from the various answers that are given. Obviously, the ultimate decisions on policy of the board, which drive my design, but I want to understand how people are thinking about it. Absolutely. It's a great source.
So all of you out there who haven't answered those questions yet, provide your thoughts.
Public
Everybody's
service announcements, please do.
listening down in Washington. We are out of time, unfortunately. This has been a fantastic discussion. Congratulations again on this first phase of Project Hamilton and the results that you have shared with us. There's clearly a lot more that you're looking at in phase 2, and clearly a lot of complicated questions that you mentioned that still need some work. But it sounds like you're on the right track. It's great to hear that you're collaborating with others in the private sector, that it is open source, and that hopefully all of this will lead to resolution of a lot of the outstanding issues, which will provide the useful information that the Fed board is looking to get in making a decision. But thank you again, Jim. I don't know if there's any closing remarks you want to make, but we certainly enjoyed having you here with us.
No, just say our team is really excited about the launch of the paper and the open source code, and we're going to continue that. We'll be developing some of our phase 2 in the open source, in the open, with partnerships from others. So we encourage people to comment, to contribute code to the process, and also to respond to the consultation paper. It's really important. The voices all matter. It's really important, and I really appreciate the time, Patricia, and having some time to talk about one of my passions.
Thank you again, Jim, and thank you to all our audience for participating and for your excellent questions. Stay tuned. This is a show that is continuing, so we're watching with interest.